what is the percentage of the business I should give away at each stage, especially let's say at seed, right, or pre-seed, let's say. And then I showed a chart which is from the 30th of June 2023, so very, very recent, from PitchBook, which is a database you can actually probably like get a free subscription to get a lot of data points. And you can see that the pre-money median is actually pretty much the same as 2022, right? It's around 4.8 million euros, and this is Europe, okay? And UK is slightly higher, but you know, it's basically in the same ballpark. The average is actually a bit bigger because you had some crazy, you know, AI companies, e.g. France, raising and this, you know, making like the stats go crazy. But ultimately, if your pre-money valuation at seed is 4.8 million, and looking at another chart from Carta is like an American cap table management tool, like Seed Legals in the UK, which I use. The median number for a seed round was to give away 20.5%. Now, if I just say, okay, if you know I'm raising at 4.8 million and I'm giving away 20%, I am raising 1.2 million euros, right? And then how to get, you know, how to do it? It's, you know, 1.2 million divided by the post-money valuation. Post-money is just the pre-money plus what you raise plus 1.2 equals 6, right? That gets you the 20%. So when you calculate your dilution, you basically take the post-money valuation. And when you talk about valuation, usually you talk about the pre-money valuation, okay? So in short, you can see that, you know, on average, people give away 20% at seed. And probably if they would to add pre-seed, which is probably around like 3 to 4 million pre-money right now, and I showed some charts last time, we're talking probably around like 10 to 15%, right? Like when I raised 500,000 at 5 million pre-money early 2020, I gave away basically, you know, 11%, right? At my pre-seed. And then you can see that it becomes smaller, but it's still significant, right? And what it means is that you really want to optimize for valuation, maybe not at seed, because at seed you really want to optimize for speed and just get going and start building. Same with pre-seed. But at Series A, you really want to optimize for valuation and like basically raise at a bigger valuation. Otherwise, you just keep diluting yourself more. But of course, watch out to not raise it like a ridiculous valuation, because if you need to still raise the Series B and your Series A was crazy, then you will be in trouble. And the next chart actually shows that a bit, but also shows you why everybody is so, let's say, so down and negative, right? Because ultimately, most of the big names have down runs right now, right? And we can see here that venture growth, so this is Series D, Series E, Series F, etc. The valuations are massively down, right? And we can see it from the public market, right? The public market software stocks are now trading at around 10 times forward, 1 year forward EBITDA, right? This is as cheap as it was in 2017, right? Which is basically, to be honest, the fair valuation, right? I don't think we will ever go back to these levels. Maybe in, you know, 20 years when there is another bubble or something. But, you know, right now we're here, and all the late stage tech companies are seeing a lot of pain, and they are regretting to have raised at like crazy valuation at 2021, because now they have to do crazy rounds, crazy down rounds, and they get crazy diluted. And founders, most of the time, founders don't make any money if they raise at like crazy valuation, because they will get basically when they exit, they have such a high pref stock sitting above them that they will not get any money, because they have to pay back the money first to all the investors. But the good news is that if you look at the early stage, you know, nothing is changing, and there is so much capital out there. As I mentioned last time, all the founders who did secondaries or who did exits or IPOs in the last few years, they're all now angel investing, right? They all have either mini family offices or active angels themselves. And again, there are so many seed and Series A VC funds out there, so you should really be optimistic.